Alrighty, let's go ahead and get started. Welcome everyone to the HUBB Live Trading Room. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. We have lots of headlines making their way through today, one being on oil jumping 4% on possible strikes in Iran. And so we have been talking about the energy sector and oil sector for quite some time, and seems like there might be some volatility ahead of us there. Interested to hear Rob's thoughts on that. Of course, very excited to interact with you all. So let's go ahead and kick off. Rob, you out there?
Hi, I'm Zack. Hey, everyone. Welcome to HUBB Live Trading Room, the HUBB Live Trading Room, I should say. Use correct English. Hope everybody had a great holiday weekend, and interesting to see what's going on to start the markets. And there is a lot to go over and talk about. You can see that we had this move down yesterday. We broke below 680. When I was doing Trade Finder, I talked about the importance of where we closed yesterday. If we could close back above 680, then we would look for a follow-through day today. Can we close higher? And a reminder on the follow-through days, the best follow-through days are when the close is above the high of the previous day. It still counts if there's a higher close from the previous day, but it's a better signal when the close is above the high of the previous day. So that's what we'll be watching for today. Conversely, had we closed below 680 yesterday, then we would be looking to see if we had a follow-through day to the downside. And if we did, then we would be looking at a significant move all the way down potentially to 650. But we don't have to worry about that right now. Now it's just all eyes on where we close today. I did want to jump to the bond market. I will get to the energy markets as Zack referenced, but let's take a look. We did have pretty big move up in prices on TLT, so therefore yields were coming down. And same thing, doesn't matter what security is. When you're looking at the charts, you go too vertical, too fast, too far from the 10-day moving average, you need to have a little bit of a retracement, and that's what's going on. A little bit of a tick down in price today and up in yields on TLT. And we might have a little more of that for another trading session or two. And then when we take a look at TNX for the 10-year, and you can see kind of a status quo on rates there, which is okay to see that not too much of a difference between what's going on. And the 10-year is not really the short end of the curve. It's shorter than 20, obviously, but we do want to see that yield curve continue to steepen. And we have this same separation here on TNX that we had on TLT. So it means that they're kind of still moving in lockstep, which is more of a flattening of the yield curve. We need to see that curve continue to steepen and stay there to feel like we're good to go and move back to the upside. I know there's a view of the fact that the new Fed chairman that'll be coming in is more of an easing policy type guy, but he also talks about shrinking the Fed's balance sheet. So I would want to know if I got a chance to talk to him, how he intended on accomplishing both. Because there are several tools in the Fed's toolbox, but one of the main ways of easing is expanding the balance sheet, meaning that the Fed's in there buying bonds and treasuries. So how do you shrink the balance sheet and inject liquidity? They have tools, but I would want to know more specifics. Not that they would ever divulge it or tell me, but that would be a question that I'd have, because it's kind of a oxymoron to do both. Or maybe they're just talking points, which the Fed is great at. The dollar hanging in there pretty well. Little bit of bounce today. We had this symmetrical triangle. If we could continue to bounce out of that, that would be good, because this was a little nerve-wracking on this move lower. Notice that We are still with a wave four right at the 61.8% level. So the possibility of the dollar going down still exists, but it would be great to see the dollar bounce back up, take out this wave four, potentially disqualify this five wave pattern and get back up into that Goldilocks channel there for the dollar. But for now, we avoided what looked like a sprint to the downside in the dollar. That was the concern. So those fears, at least for the short term, are alleviated. And then we'll see where we go moving forward. Yeah, VIX is down a little bit. Not going to show too much about that. Metals back up today. And you can see here from the chart of GLD, a bit of a bounce there. The chart of SLV is going to look quite similar. So we've gone through a pretty nice consolidation here. We got crazy. We've talked about that before with this vertical move in gold. Got way ahead of itself. Came back down. What goes vertically up oftentimes comes vertically back down. So we accomplished that. We retraced that vertical stuff, and now we're going sideways. And as I mentioned in the past, maybe now we can mount more of a 45-degree angle move in the metals. And I'll show silver. Again, the charts are pretty similar along those lines. I've mentioned I don't think that the metals are done going up for the year, but maybe they can move on a more sustainable path, which is that 45-degree angle ascent here. So if that works out, then better chance of avoiding something like this again. As you know, when a security moves in a 45-degree angle, the market always moves in impulses and corrections. That's the base of Elliott Wave. But when you move on more of a 45-degree angle, then the corrective moves are less severe. They're not volatile. You don't get these big kind of spikes. So a little bit of bounce up. Silver's got some catching up to do, though. Still below its 50-day moving average. Maybe it can get back above the 50 and the 10. And then the next thing is we'd start to work on that 10-day curling back up and doing a bullish cross of the 30 period moving average, I guess is the politically correct way to say it. But for now, we look to see if we can get back above the 50-day moving average. So first things first, we've got all the moving averages going sideways here. That's a further indication that some of the craziness has gotten worked through and look for a more sustainable move. Now let's get to the energy markets. Natural gas, I've referenced this a couple of times. We won't keep doing it, but we avoided a spike above 17, formed a perfect double top here with the high in December. We had that bomb cyclone winter storm, and then we had the talk about what was going on with conflict in Iran. Zach just mentioned that now there's a little more concern about that. It's not affecting natural gas today. It is affecting oil. I don't think anybody really thinks that there's going to be any sort of significant military action. If there was, it would have probably already happened. Maybe this is jawboning and talking points. But the concern is the shipping lanes. The same shipping lanes that are used for oil are used for LNG. And that could reignite a bid in natural gas. Natural gas has been hard to trade for a year and a half, and I think that continues. It's very difficult to figure out where things could go on this pattern. And we did have this Elliott Wave pattern complete to the downside. We retraced back up. So that five-wave pattern's over with. Now we're looking for a new impulse pattern, and this seems to be an A wave down, which would mean that you would likely get at some point. The one thing that's the most difficult, in my opinion, to forecast with an Elliott wave is where the A wave impulse will end. That's pretty difficult. There's not really significant rules on that. So you go through the five-wave pattern, then you have the corrective phase, and then you start a new impulse. Where's that A wave going to end? That's where you kind of watch and see. We are getting a little below the 10-day moving average, so at some point we will likely get a bounce in natural gas. Maybe if this rhetoric continues, we get a little bit of a bounce there, but the A wave could go as far as it wants to go before it starts to bounce. So what we watch is this separation from the 10-day moving average, but even a corrective move back up there doesn't mean that that's the start of the B wave. It just means we're correcting an oversold condition in the short term. And then here's oil breaking above that. And we did have that small triangle. I drew that, I believe, during insiders on Thursday night. And then we're moving back up higher here. So as we continue to move to the upside on oil, if we start to get up above that 80 level, then we start wondering, will OPEC come out and announce another production increase? And I think that's very possible if the rhetoric starts to heat up a bit with Iran. But for now, it's just a bounce up today, a little bit maybe of a false breakout to the downside, and now bounce back up. Or, as you know, on triangles, you either break and run, you break out, come back, test the breakout, and then resume that same directional move, or the initial break is a false breakout and the big move is the other way. Obviously, that's in play if that Iran talk heats up a bit. For now, doesn't seem to be garnering the attention that it did a couple of weeks ago when there was more concern about what could happen during that time. Quick review of the crypto markets and trying to hang in there down here at this level around 35 on BITB for Bitcoin. We did make a wave 5 low here, and the bullish scenario for those of you that are long Bitcoin is that we continue to base here and then we make our run back towards that previous 4. And been talking about how that 100% extension is the key level. If you extend beyond 100%, then you don't necessarily go back to the previous 4. If the wave 5 extends less than 100%, you do go back to the previous 4. Well, what do you do at 105? So it's just barely over the level. But that's what you're looking for if you're long cryptos, is that we start to maybe build on a potential move higher. Ethereum doing the exact same thing. Both of them broke their major supports. Both are consolidating. Both had wave 5s. The main difference here is the ETHW did not extend beyond 100% on its wave 5. So when there is a bounce, if this wave 5 is indeed done, it would go back to the previous 4, and that'd be a nice move in Ethereum. So perhaps a bit of a rally coming in the not too distant future. We'll see how that plays out. Looking at the Dow, moving up, you can see that we do have a level here at 159% on the extension. I've expressed concern about that. It's a pretty extended wave 5. If the market is able to initiate a bounce up here and we take out that wave 5, does it relabel to a 3? If it doesn't, then I think it's going to be difficult to see much more of an extension on the Dow. Could it go higher? It could, but it's right at 161.8, and the next level is way higher at 261.8, which does occur, but a small percentage of the time. So less likely for that to happen, but still a possibility. Looking at the Qs that are lagging, have been lagging, but now they're actually coming back a bit. As you can see, a pretty good day on the Qs today as we try to move back, but work to do. Can we close above that 10-day moving average? If we do, that doesn't mean much. Can we get above the 50-day? That'll be more meaningful. And then what happens when we test this downtrend line? So still have the two scenarios in place on the Qs for breaking out of that ascending triangle pattern. The breakout and test, the false breakout, those two are both still in play. A decent day also in the IWM as it's trying to bounce back up towards that wave 5 level. This one's even extended more than the Dow is on the DIA. So again, we'll be looking for the same thing. If we're able to take out this wave 5, do we get a relabeling? Does that turn into a 3? Or do we start to extend here? And the same thing with the DIA. If we don't relabel this, I don't think there's too much of an extension available here before some sort of a significant correction. So decent day today so far. We'll see where we close, but concerns there on the extension levels of both DIA and the IWM. All right, let's get to why we're really here on the HUBB Live Trading Room, which is the AI signals. As you know, I don't look at them on Wednesdays before we get together. So let's see what we have on the bullish search. Right off the bat is EPRT. There was a report from Toll Brothers this morning. That was a good report. They're a well-run company, so that looks like a pretty good potential move to the upside there. I don't necessarily like REITs. I don't like the real estate trusts. This one doesn't have too much of a move left, even if it does continue higher. So the target's there at 33.72. I don't know if there's options available here, what the liquidity is. Not much, and wide spreads. So quickly you move on. Hopefully you're starting to get to the modus operandi here. Don't waste time looking on things that don't matter. If you can't put option trades on them, then immediately go to the next one, regardless of the score. Here's a small cap something. I'm not familiar with what this security is, but I would guess it's some sort of a ETF type vehicle. You saw IWM going up today, so getting a little bit of a bounce here, a little bit of a doji, a little separation from the 10-day moving average. There might be more liquid waves in. I don't even have options, so skip that. And here's SPX Technologies. That one looks kind of interesting to me because when you look at this chart, hopefully the first thing that jumps out in your mind is the fact that we have a pretty good symmetrical triangle here, pretty well formed symmetrical triangle, especially in the second half of the triangle. And obviously, the upside breakout is occurring. And we'll see what the DMI looks like. And it's building pretty nicely, very supportive of a continued move higher. Now, the key, what do the options look like on this? Because this looks like potential candidate. And let's see if we can get some more. Usually, I always look at the front month, and you're always like, why do you look at February? Because we wouldn't do February options. But if the front month doesn't have good liquidity, it's less likely that subsequent months are. And so we get down to June, and the spreads aren't a mile wide considering the thin liquidity in the options market, but it's uh, it's too thin for us. So that one's disappointing. LIN, we're getting down under 75 now, but I'm still okay above 70 on the AI scores, as you probably know. This one's pretty interesting to me as well. Hopefully, you're starting to see these things without me drawing them out for you, but there's a zigzag right there, clearly. Nice one. The 100% extension's not too far away. The 100% and the 161.8% kind of frame where the AI target is. Maybe we get an extended C wave, which does occur fairly often within wave threes, far more often in a wave three that you get the extended C wave versus wave five. And that one looks pretty interesting to me. Let's fingers crossed. Oh, that's a good DMI there and solid. This one looks quite attractive to me. Let's fingers crossed that we have some liquidity in the options, some open interest, and there's something. It's not great, but at least we have a lot of months to choose from. April is 58 days out. We could take a look there. May would be better, but let's start at May. And there's not much liquidity in May. Let's see if April might be a little bit better. It is a little bit better. Um, Spreads are a little wide, not massively wide. The problem that we have is um, the cost. That's a 46 delta. Let's get the level down to where we want it, which is more in the 30 range, and see we come down here with the delta around. That's odd. That's a weird jump on the delta there. But Now look what happened to the spreads. So we get to something that we'd be interested in, and now the spreads go wide. Um, you come up here and you get into the area where we're at a higher delta. I don't think the exchange has adjusted that delta yet because you can see when you go up, it's the same delta up here on the 455 strike. So the 455 and the 485 I'm going to have the same strike. So I think the exchange has got that wrong, which is odd because it's traded today. That level has traded today. So um, that's a little strange. Let's go back down to April, which is where we would be looking with the better delta. So there's around 30. Now we got a $2 wide spread, and the open interest drops. You kind of have to go up to the 35 delta, but now it violates the risk profile. So frustration there that, boy, that looks really good. Perhaps a debit spread, maybe. But when you have $2 in the spread and you're looking at buying a call and selling a call, so you got a $2 wide spread on the option you're buying, you got a $2 wide spread on the option you're selling. Now you got some pretty good slippage in there, and you could be right. This could move up. It's not a huge move for a $500 stock, but it's pretty decent. But whatever profit the spread would make would probably get taken out on the slippage getting in and out. So looked very promising, but frustrating there. Let's go through the rest and see what else we may have. I think it's interesting that we're still getting a lot of signals on the bearish search, which keeps you on your toes with the things that I've mentioned on the concerns with the market. Then we go to the wave 5 bullish, which perhaps if we do continue to bounce higher, if the market does, maybe we start to see some really good setups on the wave 5 because obviously with the choppiness in the market, we've had some moves down that could then rebound back to their previous floors, and we could have some really good setups here. So I look if the market continues higher, if we continue that bounce today, that we start to see some higher scores here, and this might be a pretty good place to be. But the scores are too low right now. A little bit of separation between the 10 and the 50-day moving here average here on OKLO. Not a high enough score, just kind of looking for things to talk about, things to watch for, and see if we do bounce back up. See, every time the 10-day separates from the 50, you start to get that move back. So these last two times, see that where the 10 separated from the 50 and you bounced, you come down here, 10 separates from the 50 and you bounce, and we're kind of getting towards that area again, which could yield the bounce. But there's some things in the AI that are keeping that score down, and that's just too low. Just curious what the option liquidity looks like. Of course, it's better. We find one that looks really interesting, except for the AI score. And of course, it's going to have decent liquidity, even has weekly options. Um, so, yeah, that's frustrating. Um, you can go from just the regular technical. The DMI's not something that I look at on the Wave 5 buys, but the CCI is, and that's looking constructive as well. So you would kind of have to just thumb your nose at the AI score. This is probably where the problem is when you're dealing with money flow, et cetera. I mean, on the macro side of things, is keeping that score uh, down a bit because that's kind of low. I still find this one pretty attractive, even with the lower score. But I think a prudent thing to do would be give it a day or two, see if we tick up in the money flow. So that probably has something to do with the lower AI score there. But anyway, let's see what else we have along the lines of anything sideways. We go to the sideways search. There's four, and just not quite high enough scores. Gosh, never mind. Therapeutics. For those of you that are newer, we've kind of got a running. It's not really a joke because it was a bad trade, but a running commentary of we don't do drugs. The worst trade we've ever had in the time strategy was a pharmaceutical stock, a drug company stock, and they're just so volatile. Even when you see a great setup like this on a stock that can kind of go sideways for a while, you go back and look at the history here, that looks really good. But with these kind of companies, you just never know when they're going to come out and say something. They're working on a new drug, or they got a drug moving to phase three, or the phase three trials are looking good, or the exact opposite of what I just said with all those different things. Any of those news things move these stocks and can break them out of a sideways range. And you're sitting there looking great for a while, and then all of a sudden it explodes higher, similar to what happened here. So you kind of gotta, if you want to play in this space, you gotta plug your nose and have an iron stomach because you will see those move. They're quite volatile. I am curious to go down here on the lower end here um, because remember, on the sideways ones, the fade trade is to do a straddle or strangle. It's only a $5 stock, so that probably isn't going to work. But you can see we had a big move up. I don't know what happened there, what the news was, and it came right back down. And we've got a pretty wide boundary here. And the reason that's interesting is when you have these really low scores here, below 25, and you get down to 9, what that means is that the stock is likely not to stay within the boundaries, but to break out of the boundaries. And the wider the boundary is better when you're looking at a strangle because that implies a bigger move, right? So the wider the boundary is, and to have a boundary set up that wide on a $5 stock, normally those two lines are pretty close together. But in this case, it looks like there could be a move. I'm just curious. You don't really do, or we don't really do strangles on $5 stocks, but um, let's see what if the options have any. Oh, wow, it's got a lot of liquidity there. Um, we need to come down to May, though. No April options. Still good liquidity here and really pretty decent spreads. Um, hmm. So 750 is what I would have been looking at on the call side. So we would want to frame that with a $2.50 sign on the put. There's a zero bid, so that can't be traded, which means we come down here to the 28 delta, which is $5. Interesting that the call side would be at 7.5 strike and the put side would be at a $5 strike. So a little bit of a nod there, more towards the call side, because those two deltas are pretty close. You got a 30 delta there, a minus 28 delta here. Those are tight, but we don't have the same kind of symmetry in the width of the strikes. But not by a whole lot. But when you're dealing with a $5 stock, everything is exaggerated, right? That might be a fun one. Just, it's not very expensive. And if it can pull off one of these type of moves again, whether it's up or down, and obviously the options market is leaning towards another move back up. So maybe you got a big bounce too far, too fast, gapped up. So we come back and retrace that vertical move. We test the 10-day moving average, and then maybe it turns and runs again, which would make sense because of the needed move all the way back to 750, which is a little further move than a breakdown below $5 for the options to move in the money. Uh, yeah, see, that's what they do on the prices down here. You see the 30 to 40 cents here on the call side. But when you move over here, it's 45 to 50. So you would have to that you would immediately you see this spread go down on the put side, and to gain some value on the call side, it would be at break even for a bit, but it wouldn't matter if it did this again. Um, it almost seems like that'd be a fun one. If nothing else, put it in a paper trading account just out of curiosity more than anything else, to see if that one could potentially work out. If it does this type of stuff, then that's no good. This earnings report, we had a gap down. I'm imagining that's an earnings report that caused the gap up, but immediately retracing it, maybe it can mount some sort of a move like this from the low. That would be okay. Just a creep higher. That could still work, especially with the fact that the option prices are so inexpensive. Um, that could be a consideration. So that one would be fun just to play with, whether you put it in a regular account or just a paper trading account, just to monitor it, watch it, and see what it ends up doing. Um, so with that, we'll go ahead and open it up to the Q&A, Zach.
Alrighty, sounds great, Rob. Got a question here from Lana. What do you think is happening to NVIDIA?
Well, I had a bid this morning. Let's see what's going on there. Jensen Wong is everywhere he can, talking about how strong demand is and everything else. It's gone through a very extended consolidation here, obviously, which is kind of needed after the big run, um, that it had. And so now we go through and wait for the breakout. So I've been talking a lot lately on how I like symmetry in the Elliott Wave patterns, whether or not it's a five-wave pattern or it's a zigzag. This is not. There's no symmetry here in the uh, five-wave pattern. So when I see that, I don't tend to pay much attention to that, even though it shows a wave five down here that could potentially break lower. So looking through this area here, um, breaking out of this channel would be more interesting to me than following along with the Elliott wave pattern. So if we break above this upper um, trend line here, this channel line, um, perhaps we could see something of significance come back into NVIDIA, perhaps at least a run to 200, which isn't very far away. And if we could break that, then we might have something going. But it's been quiet for so long. And if you believe Jensen, then there's no limit to the amount of business that they have on the books. I'm taking all this stuff off here. We'll start to clean up the chart as we continue to go sideways, and see where we go. But as far as what's happening right now, nice bid today, but it doesn't mean anything unless we can break out of this. Whoops, pull away the other trend channel. Let me put that one back. Didn't mean to erase that one. Right here, there at the top of the four. We've got to break above that first and then start to look for the move up to 200. So the specific answer to your question is today it's having a nice day. It doesn't mean anything unless we break above this upper trend line, which is where the wave four was. When we break above that, then maybe we have something going here. It's a long period of time with the 10, 30, and 50-day moving averages all basically flatlining. So I think there's a uh, pretty decent chance that you do see a breakout in NVIDIA. But when you have a sideways consolidation, just like out of a triangle, you can break either way. You can break either way out of a sideways consolidation as well. So I think you just keep that on your watch list, keep looking at it, and wait until it breaks one of these lines. If it breaks down, 150 is in play. If it breaks up, 210 is probably the next stop. And then if it could break that, then wow, it could be really off and running. So I think it's definitely one to keep on your watch list and see where we go from here.
Alrighty, that actually wraps up all the questions for today's session. I do want to remind everyone to register for the Q1 update that Rob will be presenting later this evening at 8 p.m. Eastern Time. I just put that link in the chat for those that haven't registered. Please go ahead and make sure and do so. If you're not able to attend the event live, if you register for the event, that will qualify you to get a recording. So no worries again if you can't join us for the live event. We obviously hope you can and hope to see you there and interact. But if you can't, just go ahead and register and you'll receive a recording to view at your leisure. But other than that, back over to you, Rob.
All right. Sounds good. Yeah. Second, what Zach said, it's going to be great. We did the outlook forecast at the beginning of the year. So we're going to update it and see where things are and what signals we'll be looking for moving forward in the market. So it'll be great to update everything. And hopefully we'll see you all there at 8 p.m. tonight. It's going to be a fun event. So thanks for your attention today. Always value your time greatly. And we will look forward to seeing you tonight and hopefully tomorrow night during Insiders as well. Take care, everybody.